Welcome to Serious About Process, a podcast exploring how AI delivers real, scalable value when embedded in business processes. Each episode features conversations with business leaders who run critical processes, sharing how they design, build, and continuously improve the way their organizations operate. A podcast series featuring industry leaders exploring how AI is reshaping business processes to drive efficiency, reduce costs, and elevate the customer experience.
Welcome everybody to the podcast, Serious About Process, a podcast exploring how AI delivers real scalable value when embedded into a business process. I'm Gijsbert, industry lead for insurance at Appian. Appian is a process automation technology serious about AI because we want to bring it into the process. And today I'm joined by Catrin Townsend. Welcome, Catrin. Great to have you here.
Hello, nice to be here.
Yeah, no, good to see you again. You're Director of Education at Pricing Writers and Experienced Actuary, and you've written a book as well, Risky Business, an Introduction to Actuarial Science. So that's interesting. Oh, look at that. You even have it. Well, let's dig into all your knowledge, because you have a decade of experience in pricing and reserving, personal lines and commercial lines, and you also led transformation. So that's interesting also about today's topic, because we want to hone in on that. What does it actually mean, that pricing? And also, how is that evolving? And in the current time where there's lots of legacy technology, a lot of people are focused on automation, and of course we cannot talk about AI basically. So let's dig into that. I've got a background more as an operation manager, worked with a lot of underwriters, less with actuaries. But for me it was always a bit of a black box what pricing was. I know that the underwriters got a rate, and then they did some magic to the pricing, and they gave it a price. So when we last met in Copenhagen, I asked you the bold question: how do you see pricing? How do you define pricing? I'm glad I asked, because you gave quite a good perspective of it. So could you repeat that for our audience? Like, how do you define pricing actually?
Well, at Price Writers, we believe in a 9-step pricing system. And all of the steps, you can see them here, and I'll read them out for you in a second as well. It covers some of the basics that you are probably expecting: data, enrichment data, modeling, the tools and software that you use, governance, and deployment. Now, that's the answer you're probably expecting. But it also includes strategy and capability, as well as analysis, which covers anything from inflation or portfolio monitoring. And we see all of these 9 steps as being part of pricing. And it's a system. It's not a process. It's not you do one step, then the next, then the next. So the idea is that when you're building your models, you already have your deployment in mind. What can I deploy? What is going to be a real pain and it's going to block this process? What's the strategy and how does that impact what data I use? And what can my team do? And how does that enable new options or limit us in some way? So we see pricing as this interconnected system, and they are really interconnected. If you change your model type, you need to change your deployment and your governance and the data quality that you have. You need to upskill people, and that's your capability. So when one change happens in any part of the 9-step system, the whole rest of the system has to move as well to accommodate. And that's why we think pricing, it's really complicated, right? But by breaking it down into 9 steps, it's much easier to firstly give focus to each of the parts individually. But secondly, I think it gives a framework where if you're thinking about making a change to your pricing system, whether that's a new software or a new type of model or even a new data source, at that stage that you're thinking about that change, you can run through each of the 9 steps and just say, how will this affect my strategy, my governance, and all the rest of it. And so I actually think it gives a really good framework for preempting and therefore preventing issues and blockages.
No, that's fantastic, and that's of course you're painting the nirvana almost of what you want to have as an insurance company, and we'll dig a bit later in because I think there are some blockers that make that happen. As there's also IT and existing processes or existing cultures that stop that. But could you give a bit of a view of how that has changed over the last 10, 20 years? Because you have this fantastic educational set of how you should look at it and how you can improve it. But where are we today, actually, in if you talk general of what you see at insurers? Like, where are we now compared to 20 years ago?
The main difference is the speed. And this is whether you're in commercial or personal lines or any part of the market. The difference is speed. When I started at a commercial insurer in, oh my goodness, more than a decade ago, there was a mouse mat that had the rates on. They printed a mouse mat once a year, and that gave the underwriters the rates that they would use. And they only updated this mouse mat once a year. I mean, two things. One, who even uses a mouse mat anymore? But secondly, can you imagine only having rates that you change once a year? Even for commercial lines, this is not how we operate anymore. Even in commercial lines, you'd be expecting rate changes at least multiple times a year, kind of 2 or 3 times a year. And the same with personal lines. Whereas in personal lines, we used to update the tariff kind of maybe every 6 to 9 months. When I started in personal lines, nowadays it's very much, I mean, the best insurers are changing their prices weekly or even twice weekly now. And I think that's the difference, because it totally changes how you see the pricing system. We used to do big one-off changes. All of the rates are changing. Everything changes. It's a big project and it's a lot of work, but we do it once a year. And then everything is stable after that. And now we make changes so frequently that they are necessarily incremental. And that's, I think, why you need to have a much clearer grasp on how all of those changes impact your pricing system. Because it's not like you scrap the whole thing and start again every year. We're now incrementally improving as we go. And that just changes how you see the whole thing.
I love that example of the mouse mat. That's fantastic. That's fantastic. But was that just for the audience also, and from my understanding, was that commercial lines or was that personal lines?
The mouse mat was for commercial lines. It was for a Lloyd's syndicate who were writing a lot of oil rigs. And on the mouse mat, I remember very vividly, it said, if the oil rig is deeper than 250 meters, then add this much to the price. If the oil rig is in these countries, then double the price, that kind of thing. And my job for the day was, for the days that I was with the underwriter, was to input those numbers into a calculator as the broker said them. And then the underwriter would then change that price by, I don't know, like kind of 10, 20% either way, depending on how much you like the person, that seems to be what it was to me. But that's absolutely not what we do anymore. And in a way, it's fantastic that we now have much more agile systems. On the other hand, it contributes to a feeling of pressure. And it also creates this feeling that you have so much BAU, you have so much to be constantly delivering. When and how do you make time to make bigger, more fundamental changes? So I think it really does create a good and a bad thing for teams to, I guess it creates an opportunity and a challenge for teams.
Yeah, there's so much data, right, that both the actuaries and the underwriters have to consume. And as you said, the environment has changed. The speed has changed, so they all need to apply that. And so in terms of you mentioned actuaries and underwriters several times already. So even in the mouse mat days, the underwriter was applying a bit of magic to the pricing, as you said. Maybe personal relationship, maybe something else, knowledge, of course. How has that changed now? Do you still see that in the market now? That dynamic between suggested rates versus what the underwriter sees, has that changed?
I think this is one of the biggest differences between digitally distributed business and anything that uses an underwriter or broker. So in personal lines, this isn't really an issue because the actual price is the technical price, or the actual price is the price that you gave them, and that's very well documented. So in personal lines, this isn't so much of a friction point. But in commercial lines, the price that's given is still a suggestion. And I think that's a good thing. I think we have to be really honest in particularly heterogeneous lines of business and businesses where we don't have much data, that the price probably works for 80% of the risk, maybe less, but there are a lot of other things that we should consider. And that's exactly where the underwriter judgment comes in. One of my first projects that I led was changing from underwriter-led rates to a generalized linear model for one of the biggest fleet insurance products in the UK. And it took 6 months of just building the relationship with the underwriter to even get to the point where I was saying, I'm building this model. It's not going to take your job. What it's going to do is it's going to actually free you up. So you're not doing the basic stuff every day. It will actually give you more time and energy to go after the really difficult bits. And I went in there with kind of a straightforward remit: build a model, upskill underwriters on how to use it. But actually what happened was I realized that there were a lot of places where my model was wrong, and my model was always going to be wrong because we don't have the data on it. And so that project really changed how I saw the relationship between actuaries and underwriters. In a big sense, I feel like the model is great for telling you what the data is saying, but an underwriter just brings such a wealth of knowledge about what the data is not saying. And it's that tension between how much credibility do you put on both of those. But the real benefit of underwriters, both in commercial lines and in personal lines, or in personal lines, they're often called like product owners or product experts, more so than underwriters anymore. But the real benefit is that your data is historic. You're driving, looking out your rear view mirror. An underwriter and a product expert can help you translate that and say, but what you haven't considered is that in the future, they're not making these cars. So car part prices are going to go up. And I feel exactly like that at particularly in the moment when we've got such a time of inflation about to happen. Oil prices have spiked 30% in 1 month. Pricing teams need to be looking at that, not as, how do I put this into my model, but into what is this going to mean? How is this going to continue? And if they're not doing that, they're really stuck in a mode of operating that was kind of 10 years ago.
No, absolutely, very clear. But you could also see it as an opportunity, right? That change. And if you look at the technology out there that is available, satellite imaging, telematics, and of course AI to consume that and to suggest that, and that there is also an opportunity to change that for both the actuarials and the underwriting function, right?
Mm.
And maybe let's pivot it in a different way. So, do you see that? What's your experience in legacy stopping that?
Mm.
And I'll give you my perspective. What I see a lot in insurance companies is that there's this willingness to do something else, as you're doing in your training, right? To strive for that nirvana, but actually the insurance companies are held back by all their IT investments, legacy, all good diesels that are still running in the basement. But actually, if you want to do something else, they're so consumed with that transformation that during that transformation, there's no room for any real development that you need now, right? And with Appian, we try to change that. We complement that with automating and giving those a way out to automate certain things that really drive value now, or in a couple of weeks or a couple of months, not in 5 years.
Mm.
But what's your perspective on that? Like, because we're painting a picture and the opportunities, but what's holding them back?
It's so funny that you call 9-step pricing system a nirvana, because really I see it more like Oasis's little by little. It's all about making incremental improvements no matter where you are. So if you are currently very confidently using GLMs, it's about how can you potentially move to some machine learning methods? How can you automate these GLMs? Is there more enrichment data you can put into that? If you're in a commercial world where you're still very underwriter-led, it's about, okay, how can you generalize some of their logic, and whether that's a statistical model or whether it's more like a decision tree or something like that, but how can you get more of that on paper so that it's not quite so manual for them? So I really see it as a little by little process.
No, you're absolutely right. And that's, and apologies, I didn't, that's also, a step-by-step process to get there. And that was the wrong word to use then. No, but you always need to strive for the best. But let me rephrase it then, like in that step-by-step incremental improvement, how much is the insurance company hold back by legacy or IT legacy or something else? Can you put some light on that?
Legacy systems are, I think, one of the biggest problems for insurers, because so often it means that our pricing system and our strategy more generally is limited to what our system can do, or more, maybe more realistically, what it can't do. And then everything else assumes that as fixed, and we're always kind of hamstrung in a sense. But I don't think that's always the biggest issue. That's the cause. But then there are so many symptoms that fall out of that. One is that you sometimes can't do the transformations that you want to do, because you're trying to fit everything into this format that would fit with your old system, even though the old system is from the 80s or older. But more pressing day to day is it really makes your people feel unsupported. And most companies have an employee engagement survey or satisfaction survey or something like that. And IT and systems almost always have the lowest score. And being able to say, oh, actually, we can't change that because that's legacy, and oh goodness, that just makes people feel really unsupported. And in a lot of senses, it's like unlistened to. Like, you shouldn't have to be fighting against the process that's supposed to be making your life easier every day, and if that's your reality, that's a real downer for people. That is a really good way to sap motivation real quick. So I definitely see the problem with legacy systems is not so much what they won't let you do, but how does that actually impact your people? And it also impacts the skills that you train for. You're going to spend so much time training people in legacy code or legacy languages that they're not going to have the bandwidth to learn about newer processes, things that could actually add value. So I definitely see it as an opportunity cost as well in terms of your time and resource. And I think that's the side that a lot of people don't talk about. It's about people at the end of the day.
No, I hear what you say, because I've been in many projects where we try to do a lift and shift from one old system, move everything across. And it's hard work, right? It's about data migration. It's about bringing all the rules in, and but there's so much development also in the kind of systems that are available. What we see in our project is that you can really bring now business people together with operational people and IT people together and do something really exciting together, like developing something really quickly in an agile way, which is also possible to understand from an underwriter or from a business person who's focused on the business. Like, I want to see this and that and that. And you can visually create that quickly whilst your IT colleagues can work on the motor, the engine underneath, right? So I think there's an opportunity to really bring the business and IT together and make sure that they both get, or the company gets what they want, and ultimately the customer gets what they want. So I would motivate business people to you can get what you want by talking to the right people and move away from that maybe that legacy thinking that you were alluding to as well. So I think there's an opportunity there, which we at Appian also do with a lot of customers. So can I ask you a question, Catrin? Because we talked about it a little bit, but you said this rear view mirror, the actuaries, and of course there's the old way and probably still a needed way to do things. But however, it's moving so quickly, as you said. It needs to be more forward-looking. That's what you hear in the market. Do you see that happening a lot? And how do they do that? What's your view on that?
It's something that companies are trying to do. And like you say, we talk about a lot. We want forward-looking pricing or future-forward pricing. It's something you hear a lot. How do you actually do that when you also want to make data-driven decisions? That's the tension for me. Future-forward versus data-driven, because they are opposites. Because you don't have data on the future. Because if I did, I would be playing lottery numbers right now. So you can't have both of those all of the time.
No.
So the ways that I think you have to do that is you have to bring actuaries or pricing professionals who are building your statistical models with people who are scanning the current market and projecting that forward, even if their method of doing that is qualitative rather than quantitative. That could be things like, I used to do this in my previous company. I had a kind of a long-running, competition or a long-running project with my team where I said, if you can find me a new way to steal a car this week, I'll buy you coffee. So, whether it was a TikTok video or whether it was a news article or, sometimes some people would read through the technical manuals of cars and be like, oh, this one's got a security fault and the company hasn't quite dealt with it yet, or they're trying to recall these. All of this was information. All of it was data, even if it wasn't numerical data. And so being able to put that into our pricing, we had to finger in the air, do a bit of a guess on how that would translate to our theft costs. But we were able to go from, in the past, this was what was stolen, to start properly, genuinely predicting in the future, these will be the cars that are stolen. And that turned our loss ratio by 9 percentage points, which is a lot of money saved just by saying you can't always predict theft by what has been stolen. What are criminals going to be doing next? And I think that's very pressing, particularly in the world of organized crime, when it's a real cat and mouse game in that sense. I think it still applies to other lines of business. It's not just about which properties have flooded, but if you've got news reports about, they've straightened the river in this area now, so in future that bit won't flood, but the bit next on will. An AI tool such as large language models are really, really good for getting all that information and summarizing it down for you, because it's time consuming, right, to go find all this information yourself. But that would be one use, super easy, super practical, and very, very inexpensive way of bringing that all together for you.
Yeah,
now,
I love that example. It's fantastic.
And even if you don't want to use AI for that, another really easy way of doing that is to, you could pour money into doing a big, or spending a load on consultants or all of this kind of thing. But you could also just buy your underwriters coffee. A couple of underwriters and some pricing professionals in a room together. They're going to think of loads of ways to save money. And again, in my previous role, it was £6 million worth of benefit just from little pricing changes that the underwriters are casually mentioned. Oh, we don't do that because so and so and so. Oh, I'll put that in my model. So encouraging. Collaboration is such a buzzword. But genuine collaboration is how you do this. This is it. That's why we do the collaboration. It's for the forward-looking view. And it's only by bringing together pricing professionals or actuaries and underwriters and product experts that you get that amazing synergy.
Yeah, it's a simple step, but it's probably they're so busy on their own work that they sometimes forget to talk to each other, I suppose.
Yeah, and I think that's the real value of AI. That, for me, is it. The value of AI is not that it can do these things. It's that you don't have to do some of these things. So the benefits is that it saves you time by automating the easy stuff, the crank the handle stuff, the I just got to run this process, and if this happens, I have to do this type thing. It can do that side for you, which frees up your time. And that's the magic here, because if you have lots of projects on your backlog that you're like, oh, if I had the time, I'd do those. Or if you think, what could I do with all, I hire all these smart people who have loads of great ideas. Why are we not getting value from them? Well, it's because they're so bogged down with all the other stuff. Why are people not collaborating with each other? It's because they've got too much BAU on. So the value of AI is not that you're using AI. I think some conferences maybe get that wrong, but it's not that you're using AI. It's that you freed up people's time to go pursue the harder stuff. And people who start AI projects without an idea of what people's time is better spent doing, they're not going to unlock that value that they're looking for.
Yeah. Now, and I like to build on that, Catrin, because I like that thinking is also, what I see in insurance companies that there's a lot of AI investment, but they tend to be in a sort of a separate department, and they do lots of AI analysis, and that's good, and they learn from that. And but a lot of deployment is actually more in the personal efficiency space, like we all have, like ChatGPT, Gemini, whatever, in your for your emails or summarizing a document. But the real value is really when you help and bring that outcome into the process, right? Whether it's how that improves your modeling or how does that improve your underwriting, right? And I think that's then still the step to your point to take, I suppose. Yes, all these great ideas and how to use AI, you still need to bring it into the modeling process, or how quickly can I get that new model to the underwriters for them to use, so that loop goes back into the real processing. And I think that is where the real value is.
And I think the easiest way to identify those projects, I know, like you say, I know a lot of people have AI labs and they're trying to look for business cases. The easiest way is to give people a stack of Post-it notes and say, when you do this process, so, when you do your portfolio monitoring dashboard every week, what do? You look at the dashboard and then what? I look for areas that are statistically higher than previous. Great. AI could do that for you, and AI could even color code it if you wanted. Okay. And then what I do is for the areas that are higher than previous or much lower than previous, I will look into those. Okay. What do you do when you're looking at it? Well, if they're very, very high, they would be the priority. So I'd start with those first, and you can set up Agentic AI, and I think it's really important that we say it's an agent here, not just generative or anything like that. Let's try and make it easy for people to implement. But you can build Agentic AI that runs that workflow for you. So it looks at your dashboard, it highlights the segments that are way out of line. It starts with the most out of line, and then it can not make the decision for you. It's important that we say it's not going to make your decisions for you, because if everyone does that, then there's no competitive advantage to doing it, because everyone will be at the same level. But what it can do is act like a gopher. So if I had a segment that was performing at a way higher loss ratio than I was expecting, I would be saying to a graduate, like, right now, I need you to pull up all of the underwriting rules that apply to this segment. I want you to be looking at news articles to see what is going on with this. Look at the claims data. What is the actual claims that we've had come through, and how do they relate to this? And all of that is a workflow that an agentic AI could do. And it could pull all of that together for you in a nice, digestible way so that you as a pricing professional or you as an underwriter can very easily have all the information you need at your fingertips to make that decision quickly. And when we're talking about AI, it doesn't have to be big nirvana type changes. It can be as simple as it runs and it acts as the gopher to go fetch me all that information that I want and bring it back. That, I think, is a much more realistic midterm step of how insurers can use AI. And let's start there.
Yeah, no, it's a great idea. There's obviously the caveat that compliance will tell you, like, okay, but you will need to make sure there's no hallucinations on that AI, and there has to be an audit control of how that pricing came about, I suppose. But that's something we can work on.
Yeah, if it's doing the same thing as what your graduate would do. So if you would say, okay, well, the first thing I'd look at is I'd look for news articles. Well, okay, AI gives you a whole load of news articles. You do a quick check to verify that, yes, they're not hallucinations. Good. Next, okay, I need the actual claims data. Go download the current claims data from this process, clean it all up as per our usual pipeline, put it in this Excel table. Again, like that is something that AI isn't going to hallucinate very much, or I don't even think it would at all, to be honest, because it's basically following a set pipeline process that's automated anyway. So in a lot of this, when we're worried about hallucinations, we usually are more worried about generative AI. And that's why I think that using agentic AI in this kind of workflow in the same way that a human would work through things. And again, if it gets to a decision point, it stops, it comes up on your screen, hey, I need you to make this decision. I actually don't think you do hit up against quite the same compliance and governance issues because you're using it like a tool, effectively like an automated workflow runner, instead of make me a pricing system. So I think that's really important. Just being more specific, whether we're talking about generative AI, which has that hallucination issue, or agentic AI, which is kind of like a workhorse for you.
Yeah, although agentic is definition is there's an autonomous aspect to it, so you have to be cautious with that, I suppose. But I see what you're saying. The analytical part of AI can be very, very, very helpful in this area, and I suppose we have to accept also, like you do with the junior, you accept a certain error rate to happen, which you need to watch as a senior, as a more experienced individual. The same you have to apply to your AI companion or AI agent in this space. And there's a lot to learn, and we need to start learning them and improving those AI agents to make real good use of them, I think, and bring it into the process. I suppose that is what is needed, so that the underwriters can use it or the actuaries can use it in their modeling. No, great. Thanks for all your insights. And if I would have a look in the future with you, you already alluded to it and painted this picture, but how would you see the process of actuaries and underwriters in 2 years, maybe 5 years? How would you see that?
We need more coffee together, I think. As a general rule, that's always my rule for life, but more coffee. We need more collaboration, and not just with actuaries and underwriters. And now, obviously, as we've mentioned already, part of that collaboration is automating enough of our BAU so that we have time to properly collaborate, properly ask each other hard questions and have those long discussions about whatever your insured object is that move us forward. But I don't think we should stop there. I think we should be including reserving and trying to make the estimates that we all produce a consistent basis. We need a consistent basis, however we're doing this. Bringing in claims counterparts as well. If you're a pricing person who doesn't know who your head of claims is, go find them, go take them out for coffee, because they will have all of the information about particularly when you see big incidents, right? They're going to have that information first, and that's so helpful for you as well. So I would like to see more collaboration because that's going to bring us more speed in putting these things in place. And I think in the kind of 2 years framework, what I would like to see is fewer pricing transformation projects. I know that's okay. Hear me out.
You have to explain that one.
Yeah, I know. So fewer pricing transformation projects, because I hate it when I actually feel like dread when someone says, oh, we're just doing a pricing transformation project. That doesn't tell me anything about what you're changing, why you're changing it, and how this is going to affect your team and how this is going to add value for you. Instead,
a bit like a system transformation project. It's almost the same.
What even is that? What is, yeah, what are you doing? What are you up to? And I think that language really matters, because if you say to people, oh, we're doing pricing transformation, those projects will last for like months, if not years. And it feels really demotivating, and you don't feel like it's ever finished. I would like to see a lot fewer transformation projects and a lot more pricing transformation going on. So instead of being a big project maybe set up by an external team or whatever, I would like to see pricing transformation or improvement, my favorite word, improvement throughout your 9-step pricing system constantly, and specific improvement. We are moving to a data lake. We are writing this process in Python. We are adding new data, whatever it is, but use your words, is what I always tell my kids, but use specific language to describe what we're doing, because then it feels like it finishes. So when you're doing this, I would say there are 3 tips that I have. One is to break down the project into little chunks. Again, Post-it notes are a great tool for this. So break it down into, first of all, we need to understand the process. Secondly, I need to work out where people have to make decisions. And then thirdly, we're going to start automating first bit, second bit, third bit. So break it down is my first thing, because those will create little wins, which give you a feeling of motivation and momentum.
Yeah.
The second tip would be to start at the seams. And what I mean by that is start at the places where there's a handover anyway. So a lot of people want to start their coding at the start of the process, but that can mean that you end up sometimes with, okay, I get my data from SAS. Oh, and then I've started to automate the process in Python. So I do a bit in Python. Oh, and then I have to go back to SAS because I haven't finished doing that bit yet, which creates all of these seams as you go in between tooling. If you can start at the seams, if you can start at the end of that process, it's a lot more consistent. There's fewer handovers, fewer transitions, and there's going to be fewer errors. So always start at where there's natural handovers anyway. And then my third tip is to use the snowball method. So you sometimes hear about this in like financial planning and debt relief, but it's to make a little change, start getting the benefits of that value, and then use that benefit to allow you to do something else. So start with the thing that's time consuming, but you can get it done. So if that means that you automate a project that only takes 1 hour a week, but it's quick to automate, start with that. Save yourself the 1 hour. And then with that 1 hour, you can start to automate the project that takes you 3 hours a week. And then you've saved 4 hours in total, and you can use that accumulation of your time to actually get stuff done. So I'm a big believer in pricing improvement. Just maybe don't stick a big project label on it.
No, absolutely. And that's what we advise to our customers as well, right? Don't boil the ocean. Start somewhere small, get the value, and that continuous improvement. And as you said, it has an impact on the people, and they get energy back, and they are keen to start the next sprint or the next deployment of value. So and also what you said there, and I think, isn't it important? And tell me if I'm wrong, but I think in coming back to that speed of change and the impact it has on the modeling and the pricing, it's also about making sure you're building organization that is able to handle that, right? It's also about that process of how you implement improvement, but it's also about creating an organization with the necessary IT to be that agile organization that can handle all that change, right?
Yeah, I think the big differentiator, and remember that pricing is always a competitive sport, not an absolute value. So you could have the best pricing system in the world, but if all your competitors do too, then you've got no advantage. And so when you look at it like that, the future is not AI for the sake of it being AI and robots and that's cool, but the future is AI for the sake of it saves our people time. It gives our people more headspace. It gives our people more energy and enthusiasm to do the cool stuff, the difficult stuff, the collaborative stuff. And that is how we drive competitive advantage for our teams.
Love that. I think that's a nice conclusion because it brings us back where we started, serious about a process. AI is a fantastic ability to bring people together, collaborate, have coffee. As you said, learn from each other, bring it into the process and use the fantastic technology that is out there to actually make that process serious and beat your competition. Is that a good summary of what you said?
Yeah, it's all about winning and having fun in the process.
Catrin, fantastic. Thanks for this lovely conversation and insightful conversation. And look forward to see you again.
Wonderful. Thanks so much for having me.